Good evening, ladies and gentlemen. It is Thursday, the 10th of November, 2022. Welcome to Hindsight, where we learn to be a better trader. Now, I say that a little bit ironically today because I don't know anything about oil and gas, and we're trading an oil and gas stock. My point in this video is to highlight that one doesn't necessarily need to understand everything about a stock, specifically its news. It's the interpretation and the understanding of market conditions that can lead to a really sexy trade. So what we have here is elevated gas and a fluorescence that confirms a working hydrocarbon system. Absolutely nothing here makes any sense to me whatsoever. However, this aspect here of fluorescence and elevated gas showing up to 65 times above background levels in the primary target sounds significant. To me, 65 times anything of a company that's sitting at 100 mil market cap sounds pretty significant. And what we have is an 80% owned license in Zimbabwe's Basa Basin. Now, Zimbabwe is not great, of course, as a region. There's a risk associated with it, but that's already built into the existing market cap price. So that risk is already factored in. We scroll down, it's nice to see there's some drill campaign going on. And we can see that there are peaks above background gas baseline levels that have been observed, and we have some sort of levels here that again mean nothing to me, and it doesn't need to mean anything. We have 100% fluorescence, again doesn't mean anything, but pretty little pictures because hey, micro cap traders fucking love pictures. The important part here really comes down, in my mind, to this first dot point. So let's take a look at the stock before we actually see the pump. This is pre-market, effectively what you see here. And the first thing I want to note about this stock is the market cap and shares on issue. At 10.5 cents, it's sitting at around 100 mil market cap. And that's not fully diluted. I think it's more like 110, maybe 115 mil. I also want to highlight some of the biggest days it's had on the volumes. Pay attention to the range. Right, we've got 12 cents to a peak of 15.5 cents. We've got a move here from 15.5 to 18.5. So we've got ranges of up to about 4 cents at the absolute maximum, except to the downside where it sells a bit more. But to the upside, really, if we look at this stock here, we've got 5 cents at the absolute maximum, we've got 2 cents, we've got 1 cent. So the range on this is very, very difficult to push forward, to push to the upside. Now, the reason for that is because this has 900 million shares on issue. And it's also above the 10 cent level, right? So it's trading at above 10 cents, means it moves in half-cent increments. So 10, 10.5, 11, 11.5 cents per tick, right? So half-cent increments, whereas if you trade below 10 cents in this area, you go from 8 cents to 8.1, 8.2, 8.3, 8.4, all the way to 10 cents. So it's a lot easier to move a stock in 0.1 cent increments than it is in 0.5. Add on to the fact that you've got 900 million shares at this level, and you end up with a stock that's very difficult to move. Which is what makes this quite fascinating, because if we see the daily chart and we move across, we can see a very significant 17 cent range. It's a monster range. And that's 17 from the previous close. So it's a very significant move. And you can see the volumes also back that up. Now we're going to take away the hindsight aspect, and we're going to look at this trade from candle minute 1. So for me, this is a match straight away. It doesn't matter if it was negative or positive, unless there was some substantial negative surplus. This was always going to be a match for me. At least match a bit and add on. So it's a match at 17. Add on, I think it was either 17.5 or 18. It doesn't really matter. I just made sure that in the opening drive, there wasn't an instant sell-off. So it wasn't like open, 5-second, 10-second pause, and then a sell-off, because that's typically what happens on stocks with high shares on issue. This sounded pumpy enough and bullish enough and looked bullish enough straight away right off the bat. So we go to 18, we go to 20.5, and we get to 21.5. Now this is where I start scaling out, because keep in mind, at this point in time, we haven't just had a range from 17 to 22, which would be a 5 cent range. We also have to factor in that it went from 10.5 to 17, so that's an extra 6.5 cent range. 6.5 plus 5, that's an 11.5 cent range. That's a monster range. And for me, I sort of include this in the range. So gap up, 5 cent range, start closing it out around this level here. Now, in hindsight, it does end up being a little bit too early, but we can see the volumes are coming off, and there is one more spike to the upside, and that is to 26.5. And, you know, you can't beat your head on the desk and complain about a 17.5 to 21.5 or 21 move. It's not a bad move at all. So, really happy with that opening trade. And the book was really quite thin, but for 900 million shares, the book is going to thicken, and you just don't know when. So for me to lock in 5 cents from the open, for me, I was cheering. I was really happy about that. So what we have is, unfortunately, a much bigger spike to the upside, so an extra 5 cents on top, if not a little bit more. And then the pullback happens. Pullback to VWAP. Now for me, I have a little bit of a rule when it comes to stocks with high shares on issue, and that is expect them to break levels. Expect them to go just a notch further than you expect, or a notch further than I expect, rather. So for me, I'm looking at this, I'm waiting for it to break down. I'm like, oh, okay, this actually is holding, but I'm not in a rush to get it because I know exactly how these trade. This is the equivalent of like a 3 billion share on issue stock trading at the 5 cent range. It's just going to turn into a bit of a barcode. It's going to take time. It's going to consolidate. And my idea here was to get it below VWAP. So back here at 20.5. It sort of dwindles a little bit, but it ends up going down to 20. I also had an order in at 20, which I didn't manage to get filled, but I did get 20.5. 20.5, it sort of chops around and it's forming a base. This is effectively a pump consolidate if you factor in the closing price from yesterday. Pump consolidate. It's just going to take a lot longer to do. And I had a few people asking me about what to do, I'm not going to tell people what to do. All I just said was, this is going to take time. It's probably going to take all day. This is just the nature of high shares on issue stocks. This is why I think it's super important that everyone understands the shares on issue on a stock, because then you actually understand how to trade it. If this had 300 million shares on issue, it'd be a completely different fucking chart. Completely different. It'd be faster. It'd have less resistance, therefore more stronger moves to the upside. I think it's really important for all traders to really appreciate shares on issue and understand how significant it is and how it impacts the charts, how it impacts the order book. All right, 900 million shares above 10 cents, it's gonna be slow. So it does barcode a little bit. And what do we look for in a pump consolidate? Volume. And where is it? Not yet, not yet, not yet. It's taken a bloody hour to consolidate on low volumes. And there's your volume pop. Because there's no volume downside. No one wanted to sell on this news. So now we have a drying up of sellers, and we have an influx of buyers coming in and going, well, we can't get this any cheaper. We're going to have to pay up. And if we don't pay up, someone else is going to pay up and get a better price. That's just how it is. So we go forward a little bit, and it's just going to do exactly what every high share and issue stock is going to do, and that is just grind. Now, 20.5, really happy with that entry, targeting 26 on this bullish news, which is almost the high. And my plan was, and I tweeted it out before midday, I think it was, that I was targeting half out at 26, and I'm going to hold the other half overnight if this doesn't go to 28 cents. If this goes to 28 cents, it's overshooting. It's going too far, and there's going to be a pullback. So then the idea was to short from 28 cents to 29 cents with a 1 cent stop loss. So what we end up having very, very slowly, and I really want to emphasize, this is what 900 million shares on issue looks like above 10 cents. It's slow. And then, of course, you get to this point where it breaks out above 26.5, volumes come in, order book's quite thin, and then it just goes, and it overshoots. And here we go. And the other thing I mentioned as well is 2:30 timing. Guys, if you've been following my content at all, you know what happens when a stock just goes one direction like this with zero pullback. And I know what you're thinking, oh look, there's a pullback, there's a pullback, there's a pullback. No, these are not pullbacks. This is noise. Seriously, learn the difference. For a high share on issue stock, this is not a pullback. A pullback would be back to VWAP, or a structure being broken and coming back, or just anything is a pullback. It's probably easier to see this on the 5-minute chart to really get an appreciation, because high share and issue stocks look better on the 5-minute chart. You really get to see where the pullback is. And trading a few hundred shares down here doesn't make it a pullback. So there is no pullback. So a stock that has no pullback, I look for the 230 fade. And what happens at 230, guys? It drops. It drops. Is it going to be exactly 2:30 p.m.? No. Is it going to be on 5 minutes on either side of 2:30? 90% of the time. It's actually uncanny how close to 2:30 these sell-offs actually happen. So when a stock rallies with zero pullback, 2:30 is a very common fade time. I don't know why. Don't ask me why. I don't know the answer to why. I'm just a guy that recognizes patterns and takes trades based on patterns, and that's it. So we have a rally to the upside. Got the short. Unfortunately, I did stop out because I did say 1 cent risk. I did have just under half at 30, and the other half, or just over half, was at 30.5. So I took quite a lot to the upside, and I didn't want to give back too much, but the plan was there, and unfortunately I did get stopped out. I probably should have recognized a round number like 30 cents might have been a magnet. Stopping at 29.5 or 29 would have been kind of not right, I guess. But 2:30 timing, 30 cents. Should have played it a little bit better. Should have gave it just a notch wider on my mental stop or my hard stop. Either one. Either way, it does come off. End up taking at 26.5 and a little bit at 27, and that really just comes down to my idea here at 26. That's all it is. It's a rally. It's a pullback to 26. And it actually ends up being here, 26.5 and 27. And I did catch it here because the volumes came in hot. I thought it might have just bounced and gone straight back up. But silly me didn't respect the fact that this is a high share and issue stock and nothing's ever that easy. So I ended up getting 27.5, and I'm queued up at 27, which I get filled a little bit later on here. And then it comes back down, sort of messes around this 26 level, and then eventually shoots with some decent volumes right into close. So that was really nice to see. So I hope you guys got a bit of an appreciation of a few things that are happening here. Of course, the pump consolidate setup, and the appreciation of what high share and issue stocks look like. Keep in mind, below 10 cents, 900 million is not that bad, because moving a 900 million share and issue stock from 8 cents to 8.1 cents, it's not that bad. But getting a stock from 10 cents to 10.5 or 13 cents to 13.5, you're moving in half-cent increments, not 1/10 of 1 cent as an increment. So you're moving effectively the equivalent of 5 ticks from before the 10-cent level, right? So it's harder to move. So every tick is more significant, and that's why we end up with these little barcodes, and they last for ages. They can last for like an hour or two. It's actually kind of gross. I don't like it, but it is what it is. So I hope you guys got an appreciation for both the shares on issue, the impact on the chart, and I guess just being patient with a stock that has high shares on issue and just really giving it time. And the 5-minute chart is actually quite helpful when trading these high shares on issue stocks. And I hope you also appreciate the 2:30 timing. It's something worth paying attention to, and it really is for stocks that just go up. I'm sure you guys have seen a bunch of these stocks in the past where they just keep going up and there's no pullback. It's just insane strength. Pay attention to the 2:30 timing. Am I saying it's going to work every time? No. Am I saying you should take it short every time? No. I'm saying you should watch and pay attention, absorb the data, and you'll see and make your own conclusions in the future after seeing enough 2:30 p.m. Timings get hit. And that's pretty much it, guys. I hope you learned something. Please leave a comment. Do subscribe if you find the content interesting. Otherwise, guys, I'll catch you in the next video. Cheers.